Navigating the approval process to buy a house can be complex, but a First Lien HELOC offers a flexible path for potential homeowners. Let's see what the approval process looks like when buying a house. Purchasing a primary residence with a First Lien HELOC. Although it's not super common, there are a few banks that will allow you to purchase a home using a First Lien HELOC. The first step for any home purchase is to get pre-approved for a home loan. This ensures that you will be able to secure the financing you need for the purchase, allows you to know what price you can afford for your search, and increases the strength of your offer to the sellers. This process usually includes submitting an application, getting your credit pulled, analyzing assets for the down payment, closing costs and reserves, and analyzing your income to calculate the debt-to-income ratio. To be eligible for these loans, borrowers usually need to put down at least 20% as a down payment, although some banks will allow for a 10% down payment. Submitting an application. To get pre-approved, you'll need to complete an application with a lender. This is simply a questionnaire that you'll fill in about your identification, assets, income, and other information. This gives the lender the permission to pull your credit, which is also necessary. Loan-to-value ratio. The loan-to-value ratio is an important factor when determining your maximum purchase price. It is the amount of money the bank is willing to provide compared to the value of the home, which also determines the amount of money you have to bring as a down payment. Most lenders can fund up to 80% loan-to-value, which would require a 20% down payment. However, some lenders can go to a 90% loan-to-value, which only requires a 10% down payment. For example, at a 10% down payment on a $400K house, you would need to bring $40,000 at closing for the down payment. Debt-to-income ratio. This is another important factor which can determine the maximum loan amount the bank is willing to lend you. This reveals how much you can manage in terms of loans alongside your existing financial commitments. The bank will analyze your income, debt load, and projected housing expense for the new home. Typically, it's advisable to keep your DTI ratio under 40%, although the max debt-to-income can differ between banks. High mortgage payments that occupy a larger portion of your debt influences this ratio. Your overall debt includes credit cards, auto loans, student loans, and other liabilities beyond the mortgages. Pre-approval letter. Once your lender has calculated these factors and ensured that your circumstances align with their guidelines, they will send you a pre-approval letter. This letter will give you a maximum purchase price for you to then be able to shop for homes. Once you have a contract on a home, be sure to send it to your lender as quickly as possible so they can get started with your loan. Understanding the approval process for buying a house, especially when considering a First Lien HELOC, involves evaluating factors like equity, loan-to-value ratios, and debt-to-income ratios. Working with knowledgeable professionals can help you make informed decisions on your journey to homeownership. Ready to explore your options with a First Lien HELOC? Visit www.firstlienheloc.com to streamline your path to homeownership and secure your dream property.